Welcome to Resilience and Resolve with Lance Drury.
Welcome back to Resilience and Resolve with attorney Lance Drury. For more than 30 years, Lance has helped individuals and small business owners regain control when IRS problems feel overwhelming. I'm Evan Mack, and today we're talking about filing back taxes after the IRS already stepped in and estimated what they think you owe. Understanding how these estimates work and how to correct them can change the direction of your case. Lance Drury, sir, welcome back.
How you doing, Evan? It's great to see you again.
I'm well. Have you gotten back on your walks yet? Have you, has it been good enough for you to take a walk?
Oh, yeah, I took a break yesterday, but I'm going back today again. I'll go more than 2 miles today, so we got to keep picking it up.
Yes, sir.
And guess what, Evan? It was 14 yesterday morning when I warmed up the car at 8 o'clock to go to St. Louis. It's gonna be 62 Tuesday and 67 Wednesday here.
Let's go.
Go figure. Everybody will be sick.
So crazy. But Lance, when the IRS estimates someone's taxes instead of waiting for a return, what usually triggers that?
Well, they're a bureaucracy. Things fall through the cracks. There's not always any rhyme nor reason. People can go 20 years, not file a return. The IRS doesn't catch up with them. But when they do catch up with you, what the IRS is going to do is going to file what's called an SFR, a substitute for return. And the bad thing about it, most of the time, is that when the IRS prepares it, they're not going to give the credits and deductions you're entitled to as a taxpayer, and they're going to make you file single. So they're going to take away the tax advantages of filing jointly. And so you're going to owe more than if you would have filed yourself. Their numbers are erroneous, but they're gospel until you file. And secondly, if you're self-employed, they don't keep track of your business expenses. And so, if you have all these business expenses, we've had people come to us, the IRS files for them, their liabilities over 6 figures. It's $100,000 a year plus. We get through it because they didn't make estimated tax payments. The IRS doesn't keep track of their business expenses. And so when we prepare them then, guess what? Normally the liability is less than $10,000. So you don't want the IRS to file for you in most cases. Now, the exception to that is, let's say you're in a cash, high cash business, a lot of your stuff you receive in cash. You have an obligation to report that to the IRS. But guess what? The IRS doesn't know that when they file for you, because that's not reported income. If you have wages, if you have a 1099, that's reported to the IRS. Cash normally is not reported to them. So if the IRS files for you, they don't include that cash. Maybe you don't want to file that return then. Maybe you want to go with the IRS's number because it's going to be lower than if you filed the return, because you have a legal obligation to report that tax and that cash.
How does an IRS estimate typically differ from a return that's properly prepared and filed, though, Lance?
Well, I think we just talked about that. If you're an individual, they're not going to give you your credits and your deductions. If you're self-employed, they don't have your business expenses. So generally, their numbers are going to be higher than what the actual return should be. Their numbers are bogus, but guess what? They're gospel till you file.
So what tends to happen if someone assumes the IRS estimate is accurate and doesn't even, challenge it at all?
Well, then those numbers are going to stand. And so then you're stuck with that liability, and that's the liability that you've incurred with the IRS, and that's the liability that you'll have to negotiate with in order to get a settlement with the IRS.
Why does filing an actual return matter even after the IRS has already put a number on the account?
Well, again, we talked about this earlier, but normally their numbers are bogus. They're not a true reflection of what the taxpayer owes, because they take the advantages away of filing jointly. They don't give you your credits and deductions. And if you're self-employed, they don't include your business expenses as well. They track your income, your reported income, if you're self-employed, but they don't track your business expenses. So that's a huge reason why you want to file after the IRS has done an SFR, a substitute for return for you.
Yeah, Lance, you've worked with people who felt stuck once an estimate was issued. Do you have a situation where filing real returns changed the outcome for that person?
Oh, absolutely. I think I talked about it earlier, and that's just one of probably tens of thousands of people,
Mm.
especially if they're self employed. And 70% of my clients are self employed, and we've helped probably 15,000 people over the years. So, I know it's probably in the thousands. They didn't file their return, they're self employed. They show this huge liability. And then once we filed, their liability was 10 to 20% of what the IRS
Mm.
said it was, because the IRS doesn't have the advantage of keeping track of their business expenses. So just those business expenses will drive down their tax liability a lot.
Mm. So how does correcting an IRS estimate affect penalties, interest, and that collection activity?
Well, obviously, you're still going to get stuck with the failure to file penalty. And that's 25% of the raw tax. But the good news is, if the IRS says your liability is 100,000 and you only owe 10,000, the penalties for failure to pay and the interest on that is going to come down significantly. You've just kicked 90% of the penalties in interest, in addition to lowering the raw tax. So, yeah, if you actually owe less, the penalties for failure to pay and the interest is going to be a lot lower.
Mm. So Lance, what role does timing play once that estimate is on the books and enforcement has already started for the person?
Well, the clock's ticking, because after a certain sequence of letters, there's 5 letters the IRS has to send before they can levy you. So, you've got to get that a return done, your actual return done, so that the SFR isn't there by the time you negotiate. Because when you negotiate, you're going to be negotiating on their number, not the real number. So you want to get that return done right away so that you can get that filed. Now, a lot of times what happens is they'll go through the process, they'll file the final notice of intent to levy, and will file a collection due process hearing request. That stops the clock on collections, but it also stops any levies. And because they're so far behind, it's going to take 6 months or longer before we get a hearing. And so that gives us time then for the taxpayer to file their actual returns, which will lower the liability. And guess what? We'll submit that. And so what happens is that gives us time to file the actual return to lower the liability so that we can get a deal based upon a true number instead of the IRS's number.
Mm. So what makes it harder to undo an IRS estimate than it needs to be? What is that process like, and why is it like that, Lance?
Well, I don't know if it's any harder. It's not any harder than filing your actual return. So, you want to get this done, you want to get it taken care of. Um, so, just do it as soon as you can. And then you get your problem resolved. You get a true tax number, and, you can get your problem solved with a lot better monthly payment to the IRS.
Mm. And for someone listening who knows the IRS has estimated their taxes, what should they understand before making their next move, Lance?
Well, they need to get their actual tax return done. They don't want to live with that number in most cases. Like I said earlier, there may be limited cases where they want to live with that, but for the most part, you don't want to live with that number. So you need to get going on getting that tax return prepared and filed, so you're dealing with your true tax liability, not a number that the IRS came up with.
Awesome. Lance, thank you so much.
Thank you, Evan. It's always great to see you.
Absolutely. And thank you for listening to Resilience and Resolve with Lance Drury. IRS estimates don't have to be the final word, but ignoring them can lock in a much bigger problem than necessary. If the IRS has estimated what you owe and you want guidance before things escalate further, visit lancedrurylaw.com. Be sure to like, leave a review, and subscribe to the show so you don't miss the next episode. Thank you so much, and we'll see you next time.
Thanks for watching. Be sure to hit that like and subscribe button and leave us a review in the comments.